in this matter. But of course, you are the group economist at Investec, and I do believe you are better placed than us ordinary lay people to make our findings or decisions regarding this matter, very especially in light of post-pandemic and the riots in Durban last year. So, Annabel, are we saying that there is definitely hope in the country, that we can build up ourselves with the right infrastructure in order regarding investment? And what sort of investment are we talking about here?
Yes, thanks very much. Look, I think there's always hope, and I think, however, that fixed investment in South Africa, infrastructure, or in any country is only one part of what is needed for a strong economic outlook, but it is a vital and necessary part. Of course, other factors that are needed as well include a regulatory environment that is supportive of business activity, of course, one that does not impede business activity, and of course, as well, the very obvious provision of services such as electricity sufficient for economies to grow substantially faster. That also, of course, would include water provision as well, sufficient water, and of course, as well, the efficient administration of government finances. And of course, you don't want to see corruption in there, you don't want to see wastage, you don't want to see inefficiency. So there are many other factors as well which go into it.
And of course, you've just kind of preempted my future questions on the show this morning. Corruption, wastage, failing or poor infrastructure, etc., etc. Rolling blackouts as far as Eskom is concerned. So we have really deep-rooted issues in the country. But having said that, there seems to be hope as far as obviously this program, the fourth SAIC, I think it's pronounced site. As far as this is concerned, Minister of Trade and Industry and Competition, Ibrahim Patel, said that delegates at this convention or conference will receive a report back on the progress of previous investment commitments. Now, the first question is, did you attend or did you follow this conference very closely?
I followed it electronically, so I listened to all of it, and I have attended in the past, but I do receive feedback from it. I think the point is that it is an investment drive for the private sector. So it's to garner or really announce what infrastructure projects are going to take place in South Africa. In the private sector in South Africa, not in government, not involvement in government necessarily. And of course, as well, as you know, the South African Investment Conference, or SAIC, looked to raise 1.2 billion in investment in South Africa in 5 years. So this is obviously the fourth conference. They're already at 1.1 billion. So that's the feedback that we've received. And of course, 332 billion in pledges for fixed investment in South Africa have occurred at this conference this year in 2022. Remember, obviously, we missed one because of the COVID pandemic. But I think the point really is that it's showing very substantial investment commitments from large corporates. And of course, it was one of the factors which helped the currency strengthen last week. But of course, a number of other factors. Key, of course, the most important one being the strong commodity exports we're seeing in South Africa. So before the conference, 2022, to get back to your question, 774 billion had been pledged by private investors, and of course that's both domestic and international companies that are going to expand their infrastructure in South Africa or put in new infrastructure.
So, Annabel, what you did outline right at the beginning, and thank you for that very important piece of information, but this is obviously targeted at the private sector. We're not talking government involvement in any way, or at the moment, obviously, government departments are involved. There's that big fear and risk of tenderpreneurs, etc., etc. So this is targeted at the private sector, which does give investors hope that it's going to be money well spent. So in exchange, they come in, they invest, what sort of guarantees do we give them? Uh, Obviously, they're going to be investing huge amounts of money. Let's just go back to the year 2018. And I understand at that point, 770 billion rands was committed across a wide range of economic sectors. Sadly for us, shortly thereafter, COVID happened. Where and how do we follow uh, that, the money regarding 770 billion? Will all of those projects then put on hold? Will they pick up? Will they pick up now post pandemic and start working and making those investments bear the financial fruits that we're all hoping for?
So, partly to answer your question, and before the conference, because obviously the ones that invested that were announced at the conference are ones that are going to happen. So the ones that have already been pledged in the previous conferences, out of the 152 pledges made for the infrastructure investment projects in South Africa by large private sector corporates, the 45 have been completed or will soon be completed, and they said another 57 are under construction. So this is information that's off the from the SAIC themselves. But I think the key point here is that there's also some involvement from development banks as well. So we do see significant investment from the development banks of South Africa as well, for example, in other areas as well. But I think the point really is that strong infrastructure investment in South Africa this is investment that corporates in South Africa would have done anyway. It's just being highlighted, it's being brought to the fore in the media through these conferences, just to inform the country, the economy, population, but also, of course, as well, it provides a boost to investor confidence. It shows, people who are not involved, what's happening in these areas. But for example, if you were, part of a large global automobile manufacturer and you had a manufacturer plant in South Africa and you were going to expand it and spend a few billion on upgrading its infrastructure, then you would announce that at this conference. Or if you were going to perhaps open a new plant and, produce perhaps another assembly line somewhere else in the country, you would announce that at this conference as well. If you're a mining house and you were going to explore a new mine, you're going to explore a new mining shaft or a new area where there's exploration, you would announce this at this conference as well. So any large infrastructure investments which were in any case going to happen, they're now being announced at the conference. So it's not as though something new or different is happening, but on the other hand, it seeks to bring them all together, to amalgamate them, because strong infrastructure investment in South Africa is part of government's planned economic stimulus, as well as its economic and social objectives, both in the private sector and, of course, the government sector. And, of course, this overall overarching drive with capital expenditure driven by both the private and public sector, often in combination as well. So I think, this is certainly, outlines most of the private sector in this investor conference. But if you look at the Economic Reconstruction Recovery Plan, government also talks about 500 billion in infrastructure over the next 3 years from general government, and another 100 billion over a decade from 2019-20 in the infrastructure fund to leverage private sector and development finance. And all of these projects together, SAIC just being one of them, or, all these infrastructure drives together, bring us to a longer term and stronger growth. We believe that economic growth in South Africa will lift from what is commonly expected to average around 2% this year to perhaps towards 3% in 5 years' time, 2026, 27. So I think that's quite important, because it really just indicates to us the strength of the economy, if, of course, we could put other factors in place. The key point obviously is sufficient electricity supply or a stable socio-political environment. We don't want to go back down the road of the destruction of the rights we had in July last year, because that obviously damages as opposed to builds up investor confidence, economic growth and job creation. So there's many other factors that go hand in hand, but I think this is one leg of the infrastructure investment plans in South Africa.
You're very hopeful, are you not?
Sorry?
You're very hopeful and very optimistic about this drive to attract upwards of 1.2 trillion rands over the next 5 years. You are hopeful that if that kind of investment comes into the country, it will very definitely, hopefully, equate into a lot of jobs. Our unemployment rate is sitting possibly at the highest in the world as we speak. Um, so that does kind of give us hope, does it not? But when we talk jobs, Annabelle, does that mean creation of jobs in the immediate future, or is it going to be kind of a process over the next 5 years?
So I think the important point to note is that infrastructure projects, by their very nature, are longer term. So these infrastructure projects don't generate immediate, changes in unemployment, because they take several years to start, build, and obviously complete, and then obviously start being part of the productive capacity of the economy. They do obviously create employment in the infrastructure build itself, but I think the point rather is that these are part of the productive capacity of the economy. So if you are producing a lot of more motor vehicles, for example, then you're going to be exporting them and obviously have them available for sales in South Africa, which in turn creates more jobs as well on both of those parts. So I think, the point really is made by the president himself at the conference. He says this these pledges that we've had, these 300 billion, it does move the needle. It doesn't wipe out the entire unemployment figure, but it certainly adds to the number of people who are employed. I think, the point really is that we have an incredibly high unemployment rate in South Africa, as you mentioned. And sorry for not hearing your question very well earlier. I think the line might be crackled for a moment. But sorry there. But of course, as I said, we have a very high unemployment rate in South Africa, and I'm hopeful that the strong positive momentum that the president's putting in place to involve the private sector in the economy will obviously create the strong momentum needed to start to erode it down. So I think rather than expecting it to be eliminated in the short term, it's something instead which needs to be eroded down in the long term. So for example, if we look at the 2000s, when the unemployment rate dropped from closer to 30% to closer to 21% under Thabo Mbeki's strong infrastructure drive and good governance period, strong economic growth, a good commodity boom, and many other factors as well. In South Africa, for example, now, while there's a commodity boom, we obviously are battling to get the goods out of the country. There's problems on transit, there's problems at the ports. So all of these infrastructure plans on the government side, not the private sector ones we're talking about today, although there's some involvement, but the government side is also aimed at relieving those blockages there. And I think overall, the point that we're talking here about infrastructure is that it's one leg of what's needed for strong economic growth. If we persisted with the Thabo Mbeki years over the 2010s decade, we could have seen in the strong economic growth rates and good governance we had from his management, instead of the years of corruption and looting and destruction of state institutions and infrastructure we had under the Zuma decade. If we continued with the Thabo Mbeki decade of, in the strong growth rates, we would have worked out the unemployment rate from above, from 21% into the teens, into the sort of 15% mark. And obviously now that we're in the 2022s, you could have obviously started working it down towards the 10% mark. So you can see it takes a long time to work down. And the damage that's been done by the Zuma decade of administration, well, I think really from 2009 to 2017, has been to turn that path around, where you had one of declining unemployment to one of sharply rising unemployment. And of course, it also takes a couple of years to turn the boat around. So, obviously we saw a continuation of unemployment rise into 2020, made much worse by COVID, because of the destruction to the environment, the productive capacity of the economy. Now what we're trying to do is repair the finances, repair the infrastructure, also, of course, repair the damage that's been done to society, to the socioeconomic side. And all of this is a huge, huge, huge deep scar. It's really a deep wound, in fact, that hasn't even turned into a scar. And government is trying to fix all the areas it can. We're trying to keep sentiment positive. We're trying to get, the foreign investment and domestic investment sentiment as well. It's a positive, strong state, so that we do see investment on the side. But it's really a situation that has seen such deep damage that we need help from all sectors. We need involvement from all areas, whether it's the private, the government, and of course, domestic, international investment into all sectors of the economy to really lift and strengthen, the economic activity, and of course, to broaden it and make it inclusive, and obviously work down the unemployment rate, as you said. But no, it's not something that can be achieved overnight.
Okay, we also understand that obviously there will be great opportunities of integrating the African market, which can be unlocked through the African Continental Free Trade Area, which is supposed to be a pivot to Africa led growth. What does it mean for us here in South Africa, given all of the background we've just outlined? Poor infrastructure, damage to deep damage to the economy by the years of the Zuma administration, and high employment. What does that statement mean for us in South Africa?
I think it's very important for us. The African continent, obviously South Africa is sitting at the southernmost tip. We have a lot of trade in Africa. And in fact, even get quite a bit of grain from Africa. We're looking at the wheat shortage now globally, or the expected wheat shortage with the Russia and Ukraine conflict, and of course the concerns that have fed through into high commodity prices, whether it's high oil prices, high grain prices, soybeans, etc. So we import a lot of goods and export as well to Africa. And of course, the free trade agreement is aimed at strengthening that trade. In fact, South Africa seeks to strengthen trade to all countries in the world, obviously, where it can. For example, our key trading partners at the moment are China, and have been for quite a long time, in Europe, Germany, of course, also the United States as well. And we obviously have strong imports of oil from Saudi Arabia, but we have strong imports as well to India and many countries in the world. But we seek to broaden and include more countries, so we can obviously strengthen our economic activity in South Africa, produce more, export more, and then of course have more destinations to export to. And a free trade environment such as the Africa Free Trade Agreement you're talking about, that it helps with the flow of these goods, and in fact even services as well. And free exchange of trade is something which has been very positive for the Eurozone. It's something which has obviously benefited in terms of economic activity. And the same is sought here in South Africa as well, because we do have a lot of obstructions to a freer movement of goods and services from a trade perspective, and therefore economic growth between countries in Africa.
Finally, you touched on the war in the Ukraine, and I think the whole world is jittery at the moment regarding shortage of fuel, wheat. We do know Ukraine's a very huge supplier of wheat to South Africa and other parts of the world. There's fears that our fuel prices are going to go through the roof. There's also fear about food shortages. Where do we fit into the greater scheme of things as far as this is concerned? Do we need to be concerned, very especially about food and fuel prices?
Yes, so I think you bring up some good points, because obviously we have seen very high prices, but I think there's just two important points to make. The first is that South Africa is food secure, so we produce most of the food we need ourselves. In fact, we produce large quantities of staple goods, and one of those is maize, and that of course is used both in consumption by consumers and of course animal feed as well, but also exported. So we are a key maize producer, and of course export very heavily. The same goes for fruit and vegetables, meat. So a lot of our staples that we need, for example, for food in South Africa, we could easily ride out a storm through our production. There are a few that we do import. We import about 50% of our wheat that we need for bread, and we do not necessarily import all of it from the Russian-Ukraine area. We actually import quite a lot of it from other areas, but it's rather a price impact than a shortage impact that's expected there. We have in the past seen, yes, you're quite right, we have in the past seen retailers actually absorb bread price shocks. If we see sudden massive changes in bread price, quite sharp changes, in the past retailers in South Africa have absorbed those price changes to try and keep a fairly steady price for the basic forms of meat products, the basic bread price that people consume, bread products people consume as a staple. Obviously, the very sort of luxury type ones might see the price push, but really we don't expect to see an enormous difficulty there unless we see a very distant conflict persist in Eastern Europe. Or of course, unfortunately, the risk still is there of worsening, or hopefully not, to a broader country war. But the oil price you talk about is something that's quite important in South Africa because we don't produce our own oil. You know, we have oil reserves that have been discovered off the west coast in South Africa, and of course, South Africa. I'm obviously seeing a lot of environmental action stopping that. So South Africa prefers to import its oil than use its own, and I'm not sure how helpful it is, but it does damage our trade balance. It obviously weakens it. We could have had a bigger trade surplus if it wasn't for that. And of course, as well, even stronger rand, which is helpful on inflation. But we nevertheless are seeing, because of this strong environmental action, that we're not extracting and using our own oil, unfortunately. So the petrol price, as a consequence, is going to go up by about $2 a litre in April, and of course could go up even further if the oil price were to shoot up to even higher levels. You know, the risk is that it could move to, and we're looking at the Brent crude oil price at $130 a barrel, maybe $150 a barrel or worse. The concern certainly is that if that's the case, then, you know, what happens to motorists in South Africa? Now, we're not saying that will be the case. We're just saying that's the risk. You know, that is the risk. The expected case is that we do see this, these hostilities in certainly the invasion of Russia into Ukraine wear out in the second quarter. We expect to see a ceasefire and peace because that is the general expectation. But of course, if it doesn't happen, if it persists longer, then these upward prices come through. So government has said it could reduce the taxes and fuel levies that it garners on the petrol price temporarily, and that obviously probably would extend to diesel prices as well, paraffin prices, and that could help consumers get through this difficult period. So while there is this $2 per litre increase scheduled for April, we expect that government might already start to reduce some of the costs. They could also narrow the retail margin that retailers enjoy in the sale of petrol prices as well. All of these potentially temporary measures to assist in terms of this high inflationary environment, because the war, as you mentioned, in Ukraine is most likely to have a inflationary price impact on South Africa rather than any major shortages of key goods.
Mm-hmm. And you referred to the exploration of oil off the west coast. Is it the west coast of South Africa? I do know. Yes, I do know there's been a huge uproar by environmentalists and the fisher folk in that part of South Africa. So we really sit in a very difficult situation, don't we? It's our own supply of oil over a period of time. Obviously, even if they do go and explore for oil, if they are given the rights, it's not an overnight situation. It will be a couple of years before we can produce our own oil. So it's really a balancing of our own supply of oil versus our environment, which might be irreparably damaged. So it's really a very, very difficult call to make for us here in South Africa. But a time for us to wrap up. Thank you indeed for your insights. We will be watching this space very closely. But I must admit, Annabel, that I do feel more hopeful after talking with you this morning. So thank you indeed for your insights regarding a future investment in South Africa.
It's such a pleasure. Thank you for having me on your show.
Lovely chatting with you. Go well. Have a great day. That was Annabel. Thank you, Annabel. That was Annabel Bishop, Investec Group Economist, sharing a bit of good news with us on the show this morning. 8:33 exactly when we get back. We are going to be talking with Patrick Mohalusi. He is the Regional Secretary, Greater Tshwane Operation Dudula. So stay with us.